Good afternoon, everyone. My topic today is the growth of structured product in Asian wealth management. Why is it even a topic? Why should you pay attention? Well, there's no publicly available information, but I think one can estimate that today structured product represent between 20 and 30% of the revenue of any wealth shop in Asia on investment product, including insurance, right? That's doubled probably over 5 years. That's quadrupled over the past 10 years, right? So what explains this success? The word of structured product is broad. You can apply many perspectives, but I believe that fundamentally the root of success is in the fact that structured product offer formulaic outcomes. What that means is that if you get the view right, you will get the return, right? That's very important. Structured products are used to achieve essentially two things. One thing is to access assets and markets that would otherwise not be accessible. The other thing is to customize distribution of returns for investor. And so there's a huge universe of payoff that achieve participation, that achieve income, that achieve more complex outcomes as well, such as dispersion of or outperformance. So that's one way to look at it. Another way, which is sometimes overlooked, is to look at the variety of wrappers. The delivery mechanism, the legal delivery mechanism that decide what can be sold to whom and how, right? Looking at Asia, there's many jurisdictions and there are very diverse approach to how those products are regulated. But if you take Hong Kong as an example, I can count at least 5 different structured product delivery wrappers, right? So what has changed, right? Why the relevance has increased so much over the past 10 years? Well, I would say we've witnessed a complete technological revolution. With the entry of platforms, structured products today are completely platform managed, and that has done two things. The first thing is that it's decentralized, the ability to price and execute away from execution desk into the hands of relationship managers. The second thing that is done is that it's allowed the reduction of minimum issuance size and led to ultra customization of products for our investors. That, by the way, has massive infrastructure and technological implication that I think we will probably all facing. On the back of that, what we're now seeing is that banks are starting to invest in DIY platforms where clients themselves can design and execute their own structured product. Will clients self-help? At the moment, fair to say, I mean, we've invested ourselves. It remains relatively marginal. But will they self-help? How do we take them on that journey towards self-helping? That's a billion-dollar question. Now, looking back 10 years, the market forces have also shaped the product offering. Pre-COVID, in an ultra-low interest rate environment, 99% of the products were capital at risk and equity-linked. In 2022, with inflation, with the rate reset, we saw a complete swing the other way, and 70% of the product became principal protected. In 23-24, things swung back, and we probably, at the end of 2024, sat at around 30% principal protected, 70% capital at risk. And so we entered 2025 thinking that the industry is stress tested, we're ready for anything, right? But now, how is life under the Trump administration for a structured product practitioner? I would say it's been extremely eventful. A lot of us have grown a lot more gray hair. But the clients, I think the clients, they, after a very eventful month of April, I think they've integrated the new reality. They understand the new equation. And I would say they broadly divide into two camps. Some of the clients are going to want to wait it out safely, and they will look at the whole array of principal protected products. At the other end of the spectrum, we are seeing some clients play the Trump put that was discussed this morning by Steve and Jean very, very actively. Looking at the industry, I do believe that we have the tools, we have the maturity, we have the risk management framework to be able to deliver those solutions to our clients safely. And so I would say that in conclusion, I feel that, yes, you should continue to pay attention to the increased relevance of structured product because quite likely it's here to stay, stress tested, and able to weather a very broad array of market conditions. Thank you for your attention.